Hello, Maverick traders. This is Rob Reinhold. It is the Market Roundup, April 10th, 2023. Let's jump into what happened today. So today we actually had a pretty lousy down open. But by the end of the day, the markets had crawled back. So you can see Dow up about 0.3%. That was the outperformer all day. S&P was down about 1% during the day, came back to basically close flat. NASDAQ just a little negative. But take a look at the Russell. The Russell has been the underperformer lately. It is definitely catching up. Oil and gold had a down day today. If we take a look at the news here, again, the big news was last Friday. Last Friday, we got the jobs report. It was a little hotter than expected, and we didn't really get a chance to react to it until today. This morning, we had a big sell-off, and it was really because the dollar and the U.S. government bonds shot higher. And that's going to put some pressure on equities. Right now, the market believes that the Fed is nearing the end of its cycle. The jobs report last week said, okay, there might be a little bit more, but for the most part, the market thinks the Fed is done. So today we had 60% of stocks going up. So look at this. The AD line is actually quite positive, where the overall markets aren't. And we're going to get into that when we take a look at the heat map. It's definitely clear that FANG is weighing the market down. The market is starting to broaden out, just like we said. So let's take a look at the charts. Let's take a look at the S&P. And we can see that we've got this pullback here to 4080. And we can see we've had 3 attempts to break below, and every one of those has been bought. This is bullish price action. We called for a run up to 4180. That's about 2% away, somewhere over the next week or two. Look, we're moderately bullish here on stocks, and this price action we saw today just further supports that there is more strength than weakness in the market at the moment. Look, there's not a ton of strength. +1, +2 market, that's it. I want to really point out this intraday chart of the S&P. You can see pre-market, we were down, boom, took a big dip down, and then we rocketed back up. The buying is there. There is buying out there, and it's rushing in whenever there is a pullback. That is bullish price action. That being said, I want you to take a look at this heat map. We've been calling for a broadening of the market rally. Over the last 3 months, basically 20 stocks pulled the S&P up. It was Microsoft, Amazon, Google, Meta, Tesla, all of those big ones. That was what pulled the market up. The rest of the market didn't do so well. We said that over the next couple months, we're likely going to get an unwinding of that, where all the other stocks that didn't perform well in the first quarter, they're going to get a bid. And then all the things that performed really well, probably going to hang out, sell off, maybe just not go up as much. That's exactly what we saw today. Look at the broadening of this market rally all across the board. If you take out the big red tech names, this market was probably up closer to 0.5% or 1% today. So if we take a look at this market outlook, let's take a look at our scoring system here. We've got a market that is clearly above the 20, clearly above the 50. That gives us a +2. We are moderately bullish here at the moment. And for the week, we had a +1, meaning it's likely to be a slightly up week. We're not looking for anything dramatic, just a nice rise. Let's take a look at a couple trade setups here. The first one I want to talk about is TTD. That is the trade desk. And this is just a beautiful ascending triangle pattern here. Take a look at this lower trend line. Very nice. We are hitting up this resistance at 62. 66 is the next area. If we can pop through this 62, and it might stay here for a while, but this thing has some good upside potential. This is where I love diagonal call spreads. I love diagonal call spreads because I can write them, I can open them up, and as long as it stays in this area, I make money. Yes, if it takes off and run, I don't make as much money. Here's the risk graph on them. But you can see if it goes nowhere, I'm profitable. If it goes up, I'm profitable. And I like to do these just 1 week out. So I sell this Friday's $62 call, and if it doesn't break out and run, I get that $62 call option premium, and I get to keep my long call to try to see if it can actually break out and run higher. So this is the trade desk in technology. Another one we talked about over our weekend class in the trading room is LyondellBasell, LYB. This is a chemical company in the materials sector. Had a nice bull pullback. You can see nice candles here. Now, yes, it was up a little bit more today than it ended up, but look, this is still a bullish candle here. We don't see resistance until about 98 on this one. So we like anything up to 98, vertical spread, diagonal spread. No reason at all to be long calls here. It's not the market for long calls. Most likely to be spreads on pretty much all your trades. Looking at a sideways trade, we opened up one on Canadian Pacific. We talked about this one over the weekend in our trading room. We talked about how it's likely just going to be pinned at 75. So we opened up at 70. We opened up a 75 as the midpoint, and a 72.50 and a 77.50. So we're basically saying it's going to stay in this range here over the next 2 weeks. If it does, we're going to have a nice little profit. If it blows out one way or the other, we have a very minor loss here on a butterfly. And on the bear side, we entered into Blackstone Property Management Group. Nice breakdown today. It did recover by the end of the day, so we do not have a clear breakdown, but the stock was down 2.5% on a green day. This is exactly what we like to see out of our bears. We've got a 16-18 bear call spread on this one, so we're asking for it to be below $16 by expiration. Let's talk about what we see for tomorrow. The market's held bullish levels. We've had 3 days now where the market was challenged and it recovered by the end of the day. The wild card here is the dollar and the yields. If the dollar and the yields go much higher, it will sink this market. So I think you want to be watching what that dollar and yields do. But if the dollar and yields are tame, I think any dip, you buy it. You buy it because the market looks like it wants to move higher here. We are just days away from the very first of the big banks reporting first quarter earnings. So we're very quiet here on earnings. I think we've got a nice quiet week where the market just creeps up a little bit. We probably don't get that whole entire 2% this week, but I think we get a little bit of it. So I think we should stay all mildly bullish until the market tells us differently. That is a market roundup. Thanks for joining me.